Welcome back to Investing Talk Podcast. We're genuinely excited you've decided to join us today for a focused exploration. Today, we're tackling a question many of you might be asking. Is Canadian solar a good time to buy now? We've really rolled up our sleeves, diving into the latest stock analyses, recent news, and even some whispers about upcoming catalysts for this global solar power leader. Our goal is to give you a truly comprehensive view. Before we jump into the details, if you find our discussions valuable, please remember to subscribe, like, and leave a comment. Your support means a lot. And, if there's a specific company you'd like us to look into next, just drop its name in the comments below. We do look at those. Okay, let's get into it. We've spent time sifting through detailed financial reports, market sentiment, and expert analyses on Canadian solar. Our mission today is to distill all of that information into genuinely actionable insights, helping you cut through the noise and understand the real story behind the headlines.
Yeah, and what often stands out in a situation like this is how deeply interconnected the financial data, the competitive landscape, and overall market sentiment truly are. We'll try to untangle that web for you, aiming to show you not just what the numbers say, but why they matter for anyone thinking about an investment in the ever-evolving solar sector.
Let's start right at the bedrock then, the company's financial health. When we looked at Canadian Solar's latest annual report, the one for the fiscal year ending December 34th, 2024, what were the core numbers telling us about their revenue and earnings? The reports indicate total revenues of a solid, $7.53 billion.
That's right, $7.53 billion. And net income attributable to shareholders came in at $183.7 million.
Okay, and we also saw a gross margin for the year of 18.3%, and basic earnings per share EPS was around $2.74.
Those are indeed significant figures, but the real trick, as always, is context. Canadian Solar, being a foreign issuer, reports these details through a Form 20-F. It's not quite the same as a 10-K for U.S. companies, but it gives us what we need. Now, while market consensus points to, let's say, moderate growth ahead, it's crucial for you to be aware that margin compression, essentially, their profit per sale shrinking that might stick around.
And why is that?
Intense global competition, for one, and rising input costs are the other main culprit. It's definitely a tightrope walk for companies in this space right now.
That makes perfect sense.
Okay.
So beyond just the top and bottom lines, what about their financial backbone? How healthy is Canadian Solar's balance sheet? What were their debt and cash positions looking like at the close of 2024?
Okay, so the analysis showed total debt sitting at $2.82 billion.
$2.82 billion, okay.
And they had cash and cash equivalents at $1.07 billion. So if you do the quick math, that leaves a net debt of about $1.75 billion.
Right.
Now, what's interesting is that operating cash flow for 2024 was positive, a healthy $339.1 million.
Good sign.
Yes, but here's the twist. Free cash flow was actually negative.
Negative free cash flow.
Hmm.
Should that worry us?
Well, it might initially raise an eyebrow, but for a company like Canadian Solar, it's not necessarily a dire red flag. Think of it less as a problem and more as a strategy, perhaps. It often reflects significant reinvestment back into critical areas like manufacturing capabilities, R&D, and new project development.
So spending money to make money, essentially.
Exactly. This isn't just spending. It's a strategic bet on future growth.
Mm-hmm.
And importantly, their leverage ratios are moderate, their ability to cover interest payments is adequate, and the auditors didn't flag any major solvency concerns.
Okay.
Meaning they believe the company can meet its long-term financial obligations. So it suggests proactive strategic expansion rather than, a sign of financial distress. That's a key distinction for you to consider.
That's a crucial piece of context. So in such a crowded market, how does Canadian Solar manage to stand out? What are their actual competitive advantages? And on the flip side, what are the major challenges they face, especially with so many global players?
Yeah, a key takeaway here is Canadian Solar's established position. They're consistently ranked among the top global manufacturers of solar photovoltaic modules. That's significant. And they also have a substantial footprint in project development, particularly through their Recurrent Energy subsidiary.
Right, recurrent energy comes up a lot.
It does. Their advantages are quite multifaceted. A resilient, diverse supply chain, which is huge these days, strong in-house manufacturing, a truly integrated approach to project development start to finish, and a wide international market presence.
But the competition must be intense.
Oh, absolutely. The flip side is that intense competition, especially from powerhouse China-based firms like Longji and Jinko.
Yeah, those names dominate.
They do. And this has led to ongoing price wars and persistent overcapacity in the market, which unfortunately continues to squeeze profit margins across the entire sector. It's a tough environment where scale and efficiency are paramount.
Okay, so we've dissected the financials. Now let's look at how the market is actually perceiving all this. What's the pulse of their stock price telling us lately? What are the key technical levels investors should really be watching? As of, let's see, September 5th, 2025, stock's been trading in a fairly tight range, hasn't it? Like $11 to $14.50?
That's right. With a recent close around $11.13.
Okay. And our analysis pinpoints a pretty clear support zone, maybe $10.50 to $11.
Exactly. That $10.50, $11 level seems to be holding for now. And resistance looks to be up around $14 to $15.
And the trend, still down.
Unfortunately, yes. It's been locked in a year-to-date downtrend, and it's approaching what analysts call oversold territory. That's been the case since about January 2025.
And what are the indicators saying? Do they back that up?
They do, largely. What's particularly revealing is that the technical indicators broadly echo that downtrend. For instance, the 50-day moving average is around $13.40, sitting significantly below the 200-day moving average of $17.20.
Classic bearish signal, right?
Textbook bearish signal, indicating that longer-term weakness. Then you look at the Relative Strength Index, or RSI. It recently dipped below 35.
Which usually means oversold.
Typically suggests short-term oversold conditions, yeah. It hints that the stock might be due for a bounce. However, the MCD, another key momentum indicator, it remains negative. So that means we haven't seen a confirmed bullish reversal just yet. The momentum isn't there.
Okay, so potentially oversold, but no buy signal yet.
Precisely. And we also can't ignore the notably high volatility for Canadian solar. That implies larger and more frequent price swings are a real possibility for investors. Buckle up, basically.
Good point, high volatility. So that paints a clear picture on the technical side. But what about the broader mood, the sentiment around Canadian solar? What are the professional analysts saying, and how are individual retail investors feeling about the stock right now?
Well, the analyst consensus, based on our sources, leans towards a hold rating. Not a buy, not a sell, just hold.
A hold, okay. And target prices.
Generally falling in the $12 to $16 range. So some potential upside from the current price, but nothing dramatic. Interestingly, there hasn't been any significant insider buying or selling reported lately. Sometimes that silence can be telling in itself.
Or does it mean insiders are waiting too?
Could be. And then if you look at social media, forums, that sort of thing, the sentiment is decidedly neutral to negative.
Frustration.
Yeah, you sense a palpable frustration among investors over the recent price declines and just the overall cyclical weakness that's hit the entire solar sector. It's a challenging period for many players, and that's definitely reflected in the investor mood.
Okay, let's shift our gaze then. Look ahead. What's on the horizon? What recent events and upcoming catalysts could realistically influence Canadian solar's trajectory, short-term, long-term? We've seen some intriguing developments lately, haven't we? Like that project sale in Argentina.
Yes, in September 2025, their Recurrent Energy subsidiary finalized the sale of a 100 milliwatt-peak solar project down there. That brings in cash, tidies up the portfolio.
Wasn't there a new product launch? Something about batteries.
Right. Also in September, their e-storage subsidiary launched FlexBank 1.0. It's an 8.36 milliwatt-peak modular battery product. They showed it off at the RE Plus 2025 conference. That's potentially a significant move into the storage space.
Storage is huge.
Yeah.
And Q2 results back in August. How did they look?
They were a mixed bag, actually. Module shipments were up 14% quarter-over-quarter to 7.9 GBW, which is strong. But here's the real kicker. An impressive gross margin of 29.8%.
Wow, 29.8%. That's way higher than the annual number.
Exactly. It blew past their prior guidance. However, overall revenue fell slightly short.
Why was that?
Mostly due to delayed storage shipments and some project sales pushing out. So strong margins on what they did sell, but timing issues on revenue.
Interesting. That 29.8% margin is definitely something to watch.
It really is. It's a truly significant detail, especially when you stack it against that 18.3% annual gross margin for 2024 we talked about earlier. It certainly indicates strong performance in certain, perhaps more profitable segments. Could be a potential bright spot.
And management's take on this?
They've been clear in emphasizing a strategic focus on risk management and trying to maintain sustainable profitability amidst, as they put it, volatile policy backdrops globally.
So the upcoming Q3 earnings, That's going to be crucial.
Absolutely critical. It's on October 31st. Investors will be laser focused on that forward guidance. Can this margin strength persist? Especially given management themselves have guided for pressure from storage price normalization, meaning battery prices might come down, and potentially softer Chinese solar demand. That report will tell us a lot.
October 31st. Definitely one for the calendar. Beyond that critical earnings report, any other dates our listeners should mark down? And what about those speculative rumors? Anything juicy out there that could potentially move the needle?
Well, there's a fascinating mix of concrete dates and potential whispers. For upcoming catalysts you can actually track. Keep an eye out for the Q3 2025 preliminary operations update, probably around September 30th. Then there's a major ETF rebalancing on October 18th sometimes that can shift demand for a stock. Then the big one, Q3 earnings on October 31st. Looking further ahead, November 15th is the institutional holdings filing deadline. We see who's been buying or selling. And then as we approach year-end, just general watch on holiday season demand trends and year-end trading dynamics around December 20th.
Okay, that's the calendar.
Yeah.
Now, the rumors,
Yeah.
the speculative stuff.
Right, the more what-if scenarios.
Mm-hmm.
There's quite a bit of market chatter, actually. We're hearing about potential renewed U.S. federal or state incentives for solar development. That could be a huge boost for anyone operating in the U.S.
Always a factor in this industry.
Always. There are also rumors circulating about new strategic European storage partnerships that would significantly expand their e-storage division's reach. Some industry observers are anticipating a rebound in Chinese utility-scale solar orders. A positive shift in that massive market would be very welcome.
And the big one, spinoffs.
That's probably the most tantalizing for investors, yes. Ongoing rumors about a possible spin-out or maybe even a separate public listing for either Recurrent Energy or e-storage.
That could unlock value, theoretically. But how much weight should we and our listener actually give these?
That's the million-dollar question, isn't it?
Right. They sound great, but they're just rumors at this point.
Exactly. It's easy to get excited by these what-ifs, but a seasoned investor has to carefully balance that potential upside against the known concrete risks. The risks the company itself meticulously outlines in its 2024 20F annual report. Those are the hard facts we simply can't ignore when making an investment decision. You have to ground yourself in reality.
Good point. Speaking of risks, let's touch on those directly. What are the primary concerns for Canadian solar specifically? And maybe for the broader solar industry right now? What should our listener be most mindful of?
Okay, let's break them down. It helps to think in two buckets: company-specific risks and then broader market or sector risks.
Makes sense.
First, the company-specific stuff. Our sources highlight ongoing fluctuations in polysilicon prices. That's a key raw material, so its cost matters a lot. Then there's significant trade policy uncertainty. Tariffs, anti-dumping duties. These things are always looming and can really impact global operations and supply chains.
Always a political football.
Unfortunately, yes. Customer and pipeline concentration risk is also a factor, relying too heavily on a few big customers or projects, plus foreign exchange risk, since they operate globally, and, political exposure in some of their rapidly growing but sometimes less stable emerging markets.
Okay, those are specific to Canadian solar. What about the whole sector?
Right. Stepping back for the bigger picture, these market and sector risks are also pretty substantial. The solar sector, by its nature, is highly cyclical.
Boom and bust.
It can feel like that. It's very sensitive to capital market swings, sudden government policy changes, which can really shift demand overnight, and potential supply chain dislocations. We've all seen how disruptive those can be globally in recent years. And of course, the elephant in the room. The persistent overcapacity among Chinese manufacturers and the ongoing, relentless price wars globally. That continues to pressure margins for almost everyone in the industry. It's a truly complex landscape to navigate.
Okay, wow. So let's try to bring this all together. What does this all mean for you, the investor listening right now? Based on everything we've discussed, what's the overall investment thesis for Canadian solar? Is it genuinely a good time to buy?
Well, synthesizing all our sources, the overall sentiment for Canadian solar leans towards caution. If we had to put a number on it, maybe around a 4 out of 10 right now.
4 out of 10, so below average.
Yeah. I mean, look, the valuation certainly looks depressed on some metrics, and the price action is technically oversold, which, as we said, signals a potential bounce. But the underlying profit margins are notably thin. And crucially, there's no clear positive inflection point visible just yet. Nothing in the recent or upcoming filings strongly suggests earnings or margins are about to turn sharply higher.
And the competition isn't going away.
Not at all. Competitive pressures remain acutely intense. Now, their cash position and solvency seem adequate, which is good, but the company's long-term growth, it's heavily dependent on those unpredictable global policy shifts and, critically, on their ability to execute extremely effective cost control. So for you, it's really about weighing these very tangible factors, the low valuation versus the thin margins and high uncertainty.
So for our listener then, what does this imply for different investment horizons? Is this maybe a short-term trade, or could it still be a long-term hold?
That's a critical question for you to ask yourself, based on your own goals and risk tolerance. But the current data, I think, strongly suggests Canadian Solar is probably better suited for short-term trading right now.
Capitalizing on bounces.
Potentially, yes. Capitalizing on those technical bounces when they occur, maybe playing the volatility, but it doesn't look like a robust candidate for a long-term buy and hold investment at this particular stage. The significant uncertainty around achieving sustainable margin expansion, plus those persistent sector-wide headwinds we discussed, they currently seem to outweigh the potential for a quick, fundamental turnaround that long-term holders would be looking for.
So agility might be rewarded more than patience right now.
That feels like a fair assessment of the current environment, yes.
Okay. It definitely sounds like Canadian Solar is truly at a strategic crossroads, navigating some pretty significant market dynamics. Understanding these nuances is absolutely key for any investor looking at the solar space.
Indeed. And the broader question that remains, maybe something for you to ponder after this, is how that huge accelerating global push for decarbonization, how will that, alongside constantly evolving trade policies and the relentless pace of technological innovation, ultimately shape the profitability and the long-term viability of major players like Canadian Solar?
Yeah.
It's a fascinating, complex puzzle that will unfold in the years ahead. Many, many moving parts.
Absolutely. A lot to think about. Well, thank you for joining us for this detailed look at Canadian Solar. We really hope this exploration has given you a much clearer picture and some valuable insights to consider. And one last reminder, don't forget to subscribe, like this episode if you found it helpful, and please leave a comment below with your thoughts or any other companies you'd like us to investigate next.